Supply and demand. One of the best ways to trade because you're sniping the exact point where price changes directions. And if you trade the exact reversal point, you're not only getting insane risk to reward ratios, but you're also making a ton of profit on top of it. We found a perfect way to find reversals just like this, and like this. The best part is that it works on everything. Stocks, crypto, forex, futures, you name it. And the even better part is that it works on every single time frame. It doesn't matter if you're scalping, day trading, or swing trading. In this video, you'll learn exactly what supply and demand zones are, how this secret indicator automatically plots them on multiple time frames, and most importantly, how to actually trade with these zones. Make sure to stick around until the end, because we'll also show you how you can backtest these zones within seconds, so you never waste another minute in replay mode. Let's dive in. Supply and demand are the raw building blocks of every chart you see. Behind every candle, every move, it's just buyers and sellers colliding at different levels. When price explodes higher, demand has crushed supply. When it collapses, sellers overwhelm the buyers. That's where supply and demand zones come in. A supply zone is the exact spot where sellers first showed their hand. Institutions unload size there, and when price comes back, they often defend it again, turning that zone into a ceiling on the chart. A demand zone is the complete opposite. It's where aggressive buyers stepped in and forced the market higher, creating floors that hold because institutions are still sitting there. Here's why they matter. Most retail traders chase moves after it's obvious. Institutions do the opposite. They quietly build positions inside these areas, then launch the impulse move that everyone else reacts to. But if you can spot those areas, you stop guessing and start trading alongside smart money. But here's the catch. Not every zone is worth trading. The best zones come from tight consolidations that explode into decisive impulses. Weak zones come from sloppy, choppy moves with no real follow-through. Learning to filter the strong from the weak is what separates high-probability trades from random stabs in the dark. And here's the problem. Spotting the right zones by hand takes time, and most traders get it wrong. They draw random boxes on their chart and wonder why price never respects those areas. That's exactly why we built a tool that automatically does it for you. It detects the strongest supply and demand zones on any chart, any time frame, and plots them. To start using it, head over to the Indicators tab on TradingView, and then search for MTF supply and demand zones. Click on this one by Flux Charts. There'll also be a link in the description to get access. Zones appear instantly the moment you add it to your chart. You see exactly where institutions stepped in, and exactly where price is most likely to react again. In a bit, we'll show you how to actually trade these zones for sniper entries and massive risk to reward setups. But first, let's go through how this indicator actually works and how to set it up for your trading style. Here's how the indicator actually works under the hood and why it feels like you've got an expert trader marking the zones for you in real time. If you open up the settings, you'll see the detection method setting at the top. This is one of the most important settings. There are two options to choose from here: momentum and regression. The regression method is built to mimic human judgment. It scans for tight areas of consolidation, then checks for a decisive impulse away from that base. If the impulse is strong enough, the zone gets plotted automatically. Instead of fixating on single candles, it takes a more statistical approach, measuring the overall structure of price and identifying zones based on deviations from the trend. If you like focusing on longer-term moves and prefer a more calculated, structural view, this is the method for you. Momentum detection is the opposite. It looks for those sharp, dramatic bursts of price action and boxes off the exact spot where the move started. It's quick, simple, and perfect if you want the most obvious zones that jump straight off the chart. Put the two side by side, and the difference is night and day. Regression favors consistency. It filters out the noise and stays stable across multiple time frames. Momentum favors simplicity. It just highlights the cleanest, punchiest moves, even if the buildup was messy. Either way, the zones are plotted automatically, aligned across time frames, and ready for you to trade the retests with confidence. Now let's go through the other settings that give you full control over how the indicator works. The one you'll want to pay the most attention to is sensitivity. This controls how aggressive the script is when it looks for zones using the momentum method. Turn it higher and you'll see more zones appear, even from smaller price moves. Turn it lower and it filters everything down, only showing the strongest and most impactful levels. This single setting lets you dial the indicator into your trading style, whether you want more trading opportunities on your chart or fewer, higher probability zones. The rest of the settings fine-tune how the zones behave. You decide how a zone gets invalidated, whether it's a simple wick that passes above or below your zone or a full candle close. You control the visibility range so you're not distracted by zones that are too far away from the current price. You can also set the minimum width and length of a zone, which filters out weak, short-lived areas and keeps your chart focused on high probability zones. On top of that, the indicator makes it crystal clear when a zone gets retested or broken. You'll see a label print when price taps a zone again, and another when it finally breaks. This matters because retests and breaks are some of the most tradable events you'll see, and in just a minute, we're going to show you how to use them to take real trades with massive risk-to-reward ratios. But before we jump into setups, there's one more feature you need to see: multi-timeframe zones. With it, you can be on a 5-minute chart and still see the zones from the 15-minute and 1-hour time frames all on the same screen. That higher time frame context is where most retail traders fail, and we'll show you exactly why in just a second. And to make it even more powerful, you can set alerts for everything: new zones forming, zones getting retested, or zones breaking. You'll get notified in real time so you never miss a setup again. Just select which alerts you want to receive, then create an alert through TradingView. Now let's put this into action with some real trade examples. We're on the 15-minute Bitcoin chart. We're using the momentum detection method, but here's the key. We disabled the 15-minute zones and toggled on zones from the 1-hour and 4-hour time frames. Why? Because the higher time frame zones are where the strongest institutional orders sit, and trading directly off them gives you the highest probability setups. If we hide the indicator for a moment, it's obvious that Bitcoin is in an uptrend. Price is making higher highs and higher lows, which means we only want to be looking for longs. The question is, where's the best entry? That's where the indicator changes everything. Instead of guessing, we'll wait for price to pull back into a higher time frame demand zone. If that zone holds and we see a clean retest with an R label, that's our trigger to buy. But we don't stop there. To lock in the highest probability trade, stack confirmation with another indicator. You could use something as simple as the RSI or MACD. If we look at the MACD, it recently had a bullish crossover. Now everything lines up. We've got a strong uptrend, a bullish MACD crossover, and a clean reaction off a higher time frame demand zone. That's a textbook setup. Take the buy, place your stop just below the zone, and target a 3 risk to reward ratio. But of course, the market doesn't just move in one direction. So let's flip it around and look at a short setup. We're still on the 15-minute Bitcoin chart with the same indicator settings as the long setup. This time, if we hide the indicator, it's clear that price is in a downtrend. Price is making lower lows and lower highs, which means we should only be looking for shorts. The question again is, where's the best entry? With the indicator on, we wait for price to rally back into a higher time frame supply zone. If that zone holds and we see a clean retest with an R label, that's our signal to go short. And just like before, we want confirmation. We'll use the RSI for simplicity. It's above 70, meaning it's overbought and primed for shorts. Now everything aligns. We've got a clear downtrend, a rejection from a higher time frame supply zone, and an overbought RSI. That's a textbook short setup. Take the sell, place your stop just above the zone, and target a 3 risk to reward ratio. This is the power of combining lower time frame entries with higher time frame supply and demand. It keeps you out of traps, gives you sniper entries, and stacks your risk to reward in a way most traders never experience. Now you know how to spot these zones, how to stack confirmations, and how to trade both longs and shorts with sniper precision. But here's the big question: how do you know which setups actually work best over time? Most traders waste hours in replay mode, manually testing setups one by one. That's slow, frustrating, and honestly, why most people give up before they find consistency. We solve that problem too. With the supply and demand backtester, you can test supply and demand strategies against years of market data within seconds. You'll see insights about your strategy like the total profit, drawdown, number of trades, win rate, profit factor, and much more. Instead of guessing if a strategy works, you'll know. This is how serious traders separate themselves from the rest. They don't trade off gut feel. They build rules, test them fast, and only deploy what actually has an edge. And now you can do the same with a few clicks. Here's how. Go back to the Indicators tab and search for S&D automation. Click on the one by Flux charts. There'll be a link in the description to get access as well. Once you've added it to your chart, open the settings and build your strategy. We'll walk through a simple example in this video, but if you want a more detailed breakdown, we'll leave a link in the description to a full video guide we posted a couple of months ago. For this strategy, we'll enable 1-hour zones and set the strategy to take long entries whenever price retraces to a 1-hour demand zone. For shorts, we'll do the same with 1-hour supply zones. After you finish, click OK, and instantly, the backtest report gets generated. This strategy came back with a 74% win rate and a 1.75 profit factor, which is insane. Of course, backtests do not guarantee future results, but they're a step in the right direction. And that's how you trade supply and demand like a pro. Spotting zones, stacking confirmations, and backtesting strategies in seconds so you know exactly what works and what doesn't. If you want to get started today with the multi-timeframe supply and demand zones indicator or the backtester, just go to fluxcharts.com. There'll also be a link in the description. That's all for this video. If you got value from this video, make sure to hit that like button, subscribe to the channel, and turn on notifications. Also, please drop a comment if you have questions, or let us know what topic you want us to cover next. Thanks for watching, and until next time.